aware we've just received a shocking jobs report which missed to the upside. The jobs market is much hotter than expected. Jerome Powell will now have pressure from various people to continue his rate hiking. What is going on? What does this mean? Yesterday, we had terrible earnings from the likes of Apple, Google, Amazon, Ford, Starbucks. What is going on? Markets are falling. You're seeing the traditional markets here in the pre-market. Nasdaq down 2%, the S&P down over 1%, and the Dow Jones down 0.6%. Look at crypto markets here, guys. We've got Bitcoin falling 0.6. We're going to analyze the key levels, plus what is going on. Don't forget to smash up likes. Don't forget to subscribe. Guys, feels like a long time ago now, when it was just a day or so ago that we covered the FOMC press conference, and Jerome Powell came out surprisingly dovish, right? The markets were really happy, really excited. He spoke about how the disinflationary process is starting. He looked positive. He reduced the rate cut to a 25 basis point rate hike, and the markets were feeling quite positive. You had the Nasdaq running up 3% on that day. But now you've got a bunch of earnings on Thursday, which I said to be wary about. And now the non-farm payrolls, two key pieces of data, which I said, guys, do not sleep on these pieces of data. Remember, the jobs market is in focus right now. CPI is being, deemed as if it's under control. Markets have kind of ignored that. And this year they're focusing on the labor figures. And this non-farm payroll figure was a huge shocker, guys. I want to put this into perspective. We were expecting a read of 187,000. in January for the non-farm payrolls. It was 223,000 in December. Guess what it came in at? 517. Guys, 517. Let's take a look at this. That means this. Look at that graph. We were coming down this whole period, and now you've got a reading which is nearly a skyscraper like the one in July. So the labor market is still super hot. We saw the jobs figure miss as well. And these two combined, the jobs figure, which is the job openings, plus the non-farm payrolls, indicates that this labor market is not budging. Jerome Powell wants unemployment to rise slightly, right? Because that's going to help bring that last bit of inflation down. But if job demand is still high, that means workers can demand more wages, and that can keep this inflation quite stubborn. So this is a worry. I don't want you guys to think, we've had an amazing time and we're just going to carry on with our balloons and really excited that the bull market's coming. No, this is a serious reality check, okay? Because yes, we've seen progress on the CPI, but if we do not from the labor side, then there's a little bit of an issue. If we look at our risk board, what did I say the risk is? The risk is that this last piece of inflation is really stubborn and doesn't want to move. This risk remains on the table, okay? So this should hopefully put into perspective for people that earnings were slightly weak here from major companies and also the non-farm payrolls coming in hot. Quick story. So the other day, I got a message from one of my team members, and it turned out he got caught up in a phishing attack. Yes, these phishing attacks are getting more and more sophisticated, whereby the attackers are able to pretend they are a senior person in a company and request payment from somebody else. On top of that, I got another email from one of our IT guys who said I need to change all my passwords because they've been leaked on the dark web. This is a complete pain, and that is why today I'm proud to partner with Aura. Aura is an easy-to-use app which gives you everything you need to stay safe online. Aura protects you from scammers and hackers by scanning the dark web, where criminals sell stolen information, looking for your emails, your passwords, and your social security numbers. It then alerts you fast if it finds anything. Aura also gives you near real-time alerts on suspicious credit inquiries, like if someone was opening a loan or a credit agreement in your name. Their built-in VPN also allows you to stay anonymous online by keeping your browsing history and personal information safe and encrypted. Aura even helps you manage what your kids can do on their devices as well, so you can restrict specific apps, set screen time limits, and you can even set focus times to ensure your children are doing their homework instead of binging on my videos on YouTube. And not to forget, their password manager also lets you store and access all your passwords in one place. Now here's the thing, maybe you've got an app or two that does some of these things. The beauty with Aura, and what I specifically like about it, is that they've managed to bundle all of these into one place. So you just need Aura and it'll take care of all your online phishing, scamming, and VPN needs. So let Aura do the hard work of keeping you safe online, and we've got a 14-day free trial for you and up to 60% off on the subscriptions. Definitely head over to my link, ijaz.uk/Aura to take advantage of that. And let's get straight back into the video. At the Bitcoin chart, and let's try to get some basis of where we're at. So if we want to bring out our EMA ribbon, excuse the messy chart, but we've got to take a look at it like this. And we can see here that we are extended from our EMA ribbon, very extended. So for me, I'm very comfortable to see a pullback to 22,000. I've been saying that for a while. We've not created any scaffolding on this move to the upside. Ever since we broke our EMA ribbon, which is all the way at these levels of 17,000, right? We rose without testing our daily EMA ribbon. So I'm more than comfortable to see a pullback here. In fact, that will present opportunities for me to be buying the dip around these levels, and I'll be happy to see a healthy pullback, a solid bounce from 22, and then move onwards here with Bitcoin on the daily chart. But here's the way it gets a little bit scarier. What have I been screaming all along? This is a bear market rally running into key resistance on the weekly EMA ribbon. And we're starting to see that play out. We've started this week in negative territory here on Bitcoin. If the bears turn up at this level and send us back down, this could be quite painful because we have to respect the greater trend. And the greater trend is owned by the bears. Okay, so we have to keep this in mind. We have to understand that if they show up at this level and we're unable to clear this level and own our weekly EMA ribbon, we could be violently sent back down in this kind of a direction, which is not what we want. That is the last thing that we want right now here on crypto. Let's take a look at some other cryptos, which include obviously Phantom, which has been on an absolute tear. That's been holding up pretty well. As you can see, they're heading for a weekly close above its EMA ribbon. Now, you've got to be careful. When altcoins close their weekly EMA ribbon above their weekly EMA ribbon, but Bitcoin doesn't, you've got to be careful because Bitcoin can easily fake you back down to the downside. So you want to see Bitcoin follow suit before you get confident in some of your altcoins. You are starting to see some altcoins like Phantom getting back above its weekly EMA ribbon. If we drop this down to the daily, hugely extended, right? I am not chasing these green candles. If you're trading on short time frames, I've been doing a couple of scalp trades here and there, 5-minute trades, 10-minute trades, 15-minute trades, depending on what I'm seeing on the charts. By all means, go ahead and do that. For your long-term portfolio, I would certainly not be chasing these green candles. I'll be looking for retracements. If we get them anytime soon, right? This market sentiment is more likely to provide it. Will we see? I mean, we're super overextended, right? If you look at the EMA ribbon, it starts at 45 cents. We'll be very lucky to see this come back, but these are the kind of levels I'll be really wanting to buy the dip on here on Phantom, as if we get these levels back at 40 cents. Other altcoins are pretty much following suit here with Bitcoin. You can see Bitcoin down 0.7% now as I'm recording this video. Matic is slightly in the green today. Solana is down. Cadena is down. Dogecoin flat. Cosmos moving up 3%. Interestingly, you've got Avalanche down 1% almost. You've got Algorand moving up 4%. Interesting. People are starting to wake up a little bit to Algorand. So interesting time in the market, guys. I want you guys super focused on this because this could be a worry. In fact, let's take a quick refresh here to see if we got any interesting data on the Fed rate monitor tool. Because has the market shifted? No. Currently not. They're not budging just yet. They're still expecting 25 basis points at their next meeting in March. They've not changed their mind. Let's see what they've changed in May. Nope, they've not changed anything. Still actually, interesting. Half the market. So this is what we're seeing now. The majority of the market is expecting in March we're going to get 25 basis points. That's what this percentage is here. But then at the next meeting in May, most of the market thought we were going to pause, right? One more 25 and then a pause in May. Now it's 50-50. Now you've got 45% of the market there saying, hang on, we'll probably get another 25 basis points. Okay, so that's where we're sitting here in the market. And this is something we have to monitor because to face it, yes, there's been a huge shift. Yes, we're far better off than we were just a couple of months ago. But this labor market is serious and the company earnings are sharing with us some insights to be a little bit concerned about. So be very, very careful out there. Do not go chasing green candles. This is how you end up buying the peak of these bear market rallies. Be patient. If you didn't partake in this rally, just sit back, let things play out. Let's see what happens in the markets. Can we actually sustain this to flip the trend on the Bitcoin weekly and move into our next phase away from just a bear market rally? There you go, guys. Shocking jobs report here on a Friday. Just when we thought we could have a bit of fun here over this weekend, we get some horrible, horrible miss and a hot labor market. Let me know your thoughts in the comments below. Don't forget to go watch this video here. Check out the TA course, ijaz.uk/TA, completely free TA course, and I'll see you